Hello everyone, welcome to Financial Planning with Special Needs Hawaii. In this video, we will be briefly covering investment risk and the different types that exist. For more information about investments and the risks associated with them, talk to a financial advisor who can help you to create a plan that fits your specific needs and goals. With that said, let us get started with the video. So what is investment risk? Investment risk is the possibility that your assets may drop in value. There are many reasons as to why your assets may behave this way, and these reasons are classified into different types of risk: systematic risk and unsystematic risk. Before we begin to talk about risk though, we need to understand what diversification is, as it is a major way to differentiate risk types. By definition, diversification means to hold more than one security of any type. However, when most people use this term, they are talking about having a well-balanced portfolio with different securities. The portfolio might consist of things like stocks in different industries such as technology, farming, retail, etc., and bonds of different types such as treasury bonds, municipal bonds, and corporate bonds. The first risk category that we will be reviewing is systematic risk. Systematic risk are risks that are general, unpredictable, and are inherent in the investment process. These types of risk affect the overall market. It can be lessened, but it will always be there. Some examples of systematic risk include, but are not limited to, market risk, which is the general ups and downs of the market. This just happens, and it is impossible to predict. Inflation risk, which is the risk that your investment does not earn enough to beat inflation. According to a 2019 article from inflationdata.com, the long-term rate of inflation for goods is generally 3.15% per year. Inflation is the increase in cost of goods and services. For example, if a tube of toothpaste costs $3 in 2019, but costs $3.10 in 2020, well, you just experienced inflation. And interest rate risk, which is the risk of losing money because of a change in the interest rate. This risk generally applies to debt investments such as bonds. For example, if the interest rate goes up, the market value of bonds will drop. The other risk category is unsystematic risk. Unsystematic risks are risks that are inherent to either an asset class, a specific company, or to the makeup of a portfolio. These risks can be minimized by diversifying your portfolio. Some examples of unsystematic risk include, but are not limited to, credit risk, which is the risk that a company will default on a debt. Concentration risk, which is the risk of loss because your money is concentrated in one investment or type of investment. When you diversify your investments, you spread the risk over different types of investments, industries, and geographic locations. One example is having a portfolio full of tech stocks from companies located in Silicon Valley. Not only is this a portfolio with only one industry type, these companies are also located literally in one geographic area and the same country. Finally, we have strategy risk, which is the risk that a company's business venture doesn't have as good as a return as anticipated. For example, there is a lot of research and development that goes into developing new drugs for medical purposes. If a company pours millions of dollars into a new product, but it doesn't work out, then the company has just spent money for no profit. Now that we have gone over all of these different types of risk, the question remains, which is the biggest risk to watch out for? One of the biggest risks is that the client may panic when the market drops and feel compelled to sell because they fear losing all of their money. By doing this, it may feel like the client is saving themselves, but the reality is that they are buying high and selling at a loss because they haven't had the experience of seeing that market drops may rebound into gains eventually. Thanks for watching. We have more information on special needs planning topics and general financial planning topics on our website at www.specialneedshawaii.com. Make sure to subscribe for future content on financial planning and special needs planning educational videos. We will see you in the next video.